Imagine you are standing in the middle of a modern supermarket. You look to your left and see a wall of colorful cereal boxes. You look to your right and see dozens of different brands of bottled water, snacks, and detergents. It feels like an explosion of human creativity and competition, doesn't it? You feel like a sovereign consumer, empowered by the ultimate democratic tool, your wallet. You think to yourself, if I don't like this brand's ethics, I will simply buy from their competitor. If this company raises prices, I will switch to the other one. This is the fundamental promise of the free market. But what if I told you that this feeling of power is a carefully constructed mirage? What if I told you that no matter which cereal you pick, which water you drink, or which soap you use, the profits are flowing into the exact same two pockets? There is a profound transformation happening in the global economy that most people are completely blind to. We are no longer living in a world of competing companies. We are living in a world of circular ownership. We are witnessing the most massive consolidation of power in human history, occurring not through government decrees, but through the quiet accumulation of shares. Today, we are going to dismantle the illusion of choice. We are going to explore why almost every major corporation on the planet is actually owned by the same two entities. I will structure this revelation into three key pillars: the facade of the consumer brand, the rise of the big two institutional giants, and the death of traditional competition. By the end of this discussion, you will understand that when you walk into a store, you aren't choosing between companies. You are choosing between different masks worn by the same performer. Do you understand the gravity of this? Are you ready to see the math behind the mask? We are entering a new era of corporate feudalism, and your understanding of the market is the first casualty. Stay with me as we peel back the layers of this global deception. Let's start with something you touch every single day: your groceries. Have you ever spent time looking at the fine print on the back of your favorite products? If you look at the Big 10 food companies, Nestlé, PepsiCo, Coca-Cola, Unilever, Danone, General Mills, Kellogg's, Mars, Associated British Foods, and Mondelez, you begin to see a pattern. These 10 giants own almost every sub-brand you recognize. Whether you buy Honest Tea or Sprite, you are giving money to Coca-Cola. Whether you buy Ben & Jerry's or Hellmann's mayonnaise, you are giving money to Unilever. This is the first level of the illusion. We call it the brand facade. It exists to give you the psychological comfort of variety while ensuring that total market share remains in the hands of a few. But this is just the surface level. This is the level that most conscious consumers already know about. The real question, the one that leads us down the rabbit hole, is who owns the giants themselves? If you go to a financial database and look up the top shareholders of PepsiCo, who do you find? The answer is Vanguard and BlackRock. Now, if you look up the top shareholders of their vicious rival, Coca-Cola, who do you find? The answer, once again, is Vanguard and BlackRock. Do you see the problem here? If the same two people own the majority of both companies, do those companies actually have an incentive to compete on price? If Pepsi loses a customer to Coke, the owners don't lose a cent. The money simply moves from one pocket to the other. This is common ownership, and it is the silent killer of the free market. It effectively eliminates the natural checks and balances of capitalism, creating a monopolistic environment disguised as a competitive one. This is the fundamental architecture of the brand facade, a masterclass in psychological manipulation and financial engineering. Think of it like a game of football, where the same person owns both teams, pays the salaries of both quarterbacks, and owns the stadium. Does it really matter who wins the game? The owner wins regardless. In this scenario, the owner's only real goal is to make sure the fans keep buying tickets and hot dogs. In our global economy, we are the fans, and our tickets are the products we buy every day. We are participating in a rigged game, cheering for Team A or Team B, while the owners are in the skybox, laughing because they own the entire league. This ownership structure removes the fundamental pressure of the market. Why innovate? Why lower prices? When you own both the winner and the loser, your only objective is to ensure the game never stops. This is the reality of the global market today. We are watching a scripted match where the outcome for the investor is always a win, and the outcome for the consumer is always a payment. We need to look deeper into how these institutional giants rose to such absolute power. The system is designed to maintain this equilibrium, where competition is merely a performance for the public. It is a closed system, an impenetrable loop of capital that feeds itself while the spectators pay for the show. The gravity of this situation cannot be overstated. It is the death of real agency in the marketplace. Every choice you think you're making is a pre-calculated move in their favor. How did we get here? To understand the second pillar, the rise of the institutional giants, we have to look at a massive shift in how money works. For most of the 20th century, if you wanted to invest in the stock market, you bought shares in a specific company. You owned a piece of Ford or a piece of IBM. But in the 1970s, a man named John Bogle, the founder of Vanguard, popularized a new idea: the index fund. Instead of trying to pick the winning company, why not just buy a tiny piece of every company in the entire market? It was a brilliant, low-cost way for average people to build wealth. And it worked. Millions of people moved their retirement savings into these funds, but as these funds grew, they became monsters. Today, BlackRock and Vanguard manage a combined total of nearly $20 trillion. To put that in perspective, that is more than the GDP of almost every country on Earth except for the United States and China. Because they manage so much money, they are forced to buy shares in everything. They are the largest shareholders in big oil, big tech, big pharma, and big media. They own the banks that lend you money and the real estate companies that own your apartment. They have become the permanent owners of the global infrastructure. Do you understand what this means for the concept of private property? We have moved from a system of many owners to a system of the two owners. This is not just a change in scale. It is a fundamental shift in the nature of ownership itself. When two entities hold the keys to the entire global engine, the traditional rules of the market are effectively suspended. This concentration of capital has created a gravity well that pulls all economic activity toward a single point of control. It is an unprecedented historical event, the quietest revolution in human history, occurring on the balance sheets of Wall Street rather than in the streets. This is the rise of the institutional giants, the new architects of our reality. Think of it like a game of football where the same person owns both teams, pays the salaries of both quarterbacks, and owns the stadium. Does it really matter who wins the game? The owner wins regardless. In this scenario, the owner's only real goal is to make sure the fans keep buying tickets and hot dogs. In our global economy, we are the fans, and our tickets are the products we buy every day. We are participating in a rigged game, cheering for Team A or Team B, while the owners are in the skybox, laughing because they own the entire league. This ownership structure removes the fundamental pressure of the market. Why innovate? Why lower prices? When you own both the winner and the loser, your only objective is to ensure the game never stops. This is the reality of the global market today. We are watching a scripted match where the outcome for the investor is always a win, and the outcome for the consumer is always a payment. We need to look deeper into how these institutional giants rose to such absolute power. The system is designed to maintain this equilibrium, where competition is merely a performance for the public. It is a closed system, an impenetrable loop of capital that feeds itself while the spectators pay for the show. The gravity of this situation cannot be overstated. It is the death of real agency in the marketplace. Every choice you think you're making is a pre-calculated move in their favor. Now you might say, but Professor, Vanguard and BlackRock don't own the money. They just manage it for their clients. On paper, that is true, but in reality, they hold the voting power. When a company has an annual meeting to decide who will be on the board of directors or what the company's environmental policies will be, it is the representatives from Vanguard and BlackRock who cast the deciding votes. They are the ones who tell the CEOs of the world how to behave. If a CEO decides to lower prices to help the consumer, but that move hurts the short-term profits of the shareholders, the big two can simply vote to fire that CEO. This creates a global corporate culture of absolute uniformity. Every company starts to act the same, talk the same, and use the same slogans because they are all answering to the same two masters. Why is this a trap for you? Because it removes your ability to vote with your feet. In a traditional market, if a company treats its workers poorly, you can boycott them and support a competitor who treats them better. But in a world of common ownership, the competitor is also owned by the same people. The alternative is just another branch of the same tree. This leads to a phenomenon we are seeing everywhere today, the enshittification of products. Have you noticed how everything seems to be getting more expensive while the quality of the materials and the service gets worse? This is the logical result of a lack of true competition. If the owners don't fear losing you to a rival, they have no reason to provide value. They only have a reason to extract as much wealth from you as possible before the system breaks. This extraction is systematic, relentless, and almost invisible to the average person. We are witnessing the slow degradation of value in every sector, a deliberate choice made by managers who answer only to the institutional giants. The consumer's well-being is no longer a factor in the equation of profit. Choice is dead, and value is a memory. Let's look at a real-world experiment to illustrate this. In 2014, a group of researchers looked at the airline industry. They found that on routes where the same institutional investors owned large stakes in competing airlines, ticket prices were significantly higher than on routes where the owners were different. Why? Because the managers of those airlines subconsciously, or perhaps consciously, know that they shouldn't engage in price wars that would hurt the overall portfolio of their major shareholders. It is a form of quiet collusion. No one has to meet in a dark room to fix prices. The structure of the ownership does it for them. Do you see how this affects your holiday travel, your commute, your life? You are paying a hidden tax to the big two every time you fly, every time you buy medicine, and every time you fill up your gas tank. This quiet collusion extends far beyond the skies. It is in your pharmacy, your grocery store, and your utility bills. It is a fundamental drain on the wealth of the middle class, designed to maximize the returns of the institutional portfolio at any cost. We are paying for the privilege of our own lack of choice. This is the hidden architecture of the 21st century economy, a system where the price is set by the owner's interest, not the market's demand. Every transaction you make is a confirmation of their dominance. This is the price of consolidation, a tax on the very idea of a free market. Every time you open your wallet, you are unknowingly funding the system that restricts your options. It is a recursive trap, where the only way out is to stop playing the game, which, for most of us, is not an option. This is the silent tax of the big two, the invisible cost of our current economic reality. This brings us to the third and most chilling pillar, the death of the free market. We are taught that capitalism is a system of creative destruction, where new, innovative companies rise up to challenge the old, stagnant ones. But how can a startup challenge a giant when the giant's owners also own the banks the startup needs for a loan? The big two have created a closed-loop system. They don't just own the players, they own the air the players breathe. This concentration of power has social consequences. Have you heard of ESG? Environmental, social, and governance. On the surface, it sounds wonderful, but in practice, ESG is the tool the big two use to enforce ideological conformity. If a company doesn't follow the suggested social guidelines, its ESG score drops, and the big two can threaten to pull investment. This is the marriage of the state and the corporation, a concept history has an uncomfortable name for. When the line between private profit and public power disappears, the citizen is left with no advocate. You can't vote out BlackRock. We are living through a silent coup where the sovereignty of the nation-state is being replaced by the sovereignty of the balance sheet. And the most terrifying part, most people are still arguing about the labels on the cereal boxes, unaware that the entire store has been sold. This is the end of the citizen as a sovereign actor and the beginning of the consumer as a managed resource. We are being reduced to data points in a global spreadsheet where our purpose is to maintain the stability of the institutional portfolio. The free market was a dream of freedom. The circular economy of ownership is a reality of control. We must ask what happens when this system becomes fully automated. This is not a future possibility, it is the current trajectory of our global society. The erosion of national sovereignty in favor of corporate interests is the defining struggle of our age. When capital is the only language spoken by power, the voice of the person is silenced. We are spectators in our own governance, watching the balance sheet replace the Constitution. Have you heard of Aladdin? Asset, liability, debt, and derivative investment network. This is the centralized AI system owned by BlackRock. It is the brain of the global financial system. Aladdin monitors over $20 trillion in assets, performing millions of calculations every second to determine the risk and reward of almost every major investment on the planet. When Vanguard and BlackRock decide where to move their trillions, they are following the instructions of an algorithm that sees the entire world as a single spreadsheet. Aladdin doesn't have a moral compass. It only cares about the optimization of the portfolio. This leads to the subscription trap. You don't own your software, you subscribe to it. You don't own your music, you rent access. This is the transition from a market of assets to a market of access. In this new world, you own nothing, and the big two own everything. They aren't just selling you products, they are selling you back your own life, one monthly payment at a time. Is this freedom, or is it a new digital form of serfdom? The Lord of the Manor has been replaced by the high-frequency trading server, and we are the digital serfs paying rent for our existence. This is the ultimate optimization of capital, a world where everything is rented, nothing is owned, and every movement is a transaction that feeds the algorithm. We are moving toward a state of absolute consolidation, where the human consumer is eventually automated away from the feedback loop entirely. The very concept of ownership is becoming a luxury of the past, replaced by a perpetual state of renting our own lives from the giants. Every subscription is a link in the chain, every update a new term of service we must accept to participate in modern life. We are becoming data points in an optimized algorithmic reality, where the only thing that matters is the consistency of the revenue stream. The human element is a friction the machine is designed to eliminate. This is the endgame of the big two. We are standing at a crossroads in human history. The invisible hand of the market has been replaced by the visible hand of the institutional investor. But there is a final layer to this story. The consumer is no longer a sovereign actor. You are becoming a data point to be managed. But to break the illusion, we must first recognize it. Stop falling for the brand war distractions. It doesn't matter if you are Team Apple or Team Android. Those are tribal identities created to keep you from looking at the ownership structure above them. Reclaim your economic sovereignty. Support local businesses, independent creators, and decentralized platforms. Every time you move $1 away from a global giant, you are poking a hole in the facade. Demand voting transparency for your retirement funds. We must turn the passive investor into an active citizen. The illusion of choice is the most effective form of control, but the moment you realize the walls are painted with a mural, the mural loses its power. You are no longer a consumer being managed. You are a person who is awake. The choice was never between Pepsi or Coke. The choice was always between being a user in their system or a creator in your own. Stay curious, stay independent, and above all, stay awake. The market is watching you, but now you are watching the market. Thank you for your time and your attention. Global News, Agora will continue to bring you the truth behind the mask. Good night and stay sovereign. We are just getting started in this exploration of the global powers. Keep your eyes open and your mind sharp. The world is changing and you must decide your path. Farewell, and remember, you are the only one who can truly break the loop. See you in the next report. The future belongs to those who see through the illusion and choose to act. Stay vigilant, stay free, and never stop questioning the owners of the store. This is Global News Agora, signing off. Take care and stay awake. The path to sovereignty starts with a single step, a single choice made outside their loop. Which step will you take today? The world is waiting for your answer. Good night.